Morning, everybody. It's Monday, the 18th of May. We're Signal Centre Talking Ball. I'm Joe Labour, joined by Steve O'Hare and Ian Coleman. Morning, guys.
Morning, all.
Good weekend?
Yes.
Yeah, not as good as yours by the sound of it, but
Not judging by Steve's face, no. A bit rouge.
That's how natural that is.
Yeah?
that's
Yeah.
part
Looking good,
Guinness,
mate.
part sunshine.
Yeah, definitely. part gin. There's no
Why
Guinness
not?
left. There's no beer left. I'm on to gin.
No,
So
good.
got to
Good
wait
on
till
you, mate.
Tuesday.
Oh, it's very nice, that gin you got me for my birthday, by the way. Thank you.
Was it nice?
What's left of it?
Yeah, it doesn't last long, does it?
No.
I'm surprised there's still some there.
I had another bottle to get through first.
Oh, yeah.
Excellent stuff. Okay, so any headlines that anybody wants to rattle off before we get going with the FX? Talking
No,
FX, anything over the weekend that we should
really
be across?
Only that I saw something on the Bloomberg email this morning that somebody from the US, I can't remember who, I'll have a look in a minute, has actually accused China of putting infected passengers on different planes and flying them around the world.
Right, that's a pretty bold accusation.
Yeah. To get it going, to get it G'd up a bit.
Did his
All right,
name
we'll come
begin
back to
with
that
T?
then.
And sound like Hump?
No, it wasn't him. No, it wasn't our pal. I'll have a look in a minute once we've done the.
All right, lovely.
Mumble.
Just chuck it over to you then for round up on the old FX.
Okay, mate. Daily chart, dollar index, very little change. The only sort of currency pair, or the single currency that took a bit of a bid on Friday, was the euro, especially against sterling. So I don't know if it was on sort of ongoing negotiations or no negotiations, if you like, between Barnier and the UK, or was the euro strength on the back of the GDP figure that came out at 3.8%, which was as expected, and maybe people are thinking, well, at least it came in as expected and not worse, because we keep on having dire figures. But the euro was the main buyer on Friday, and even then it only sort of managed to close sort of little net change. So interesting over the weekend is the fact that let's just get it, where is it, Bank of England's chief economist Haldon stated that central bank could have following further options such as negative interest rates and buying much riskier assets. And that's seen a gap open in a lot of sterling pairs this morning. But I think that gap open is an opportunity to buy sterling, but we'll be talking about that on the gun to the head. So just having a look at cable, we've got an AB equals CD formation target that's just completed here, which is at 120.92, and we're just seeing a bit of upward pressure this morning. This is a confluence area, so it's a 161.8% extension of this leg, and it's a 50% pullback of this whole leg. So I think that's quite solid support to the downside. Euro sterling is quite interesting as well. We've got that breakout 30 days. It stayed within this channel formation, or horizontal channel formation, and then it's broken out, and it's now touched the top of this bullish channel formation, 89.62 there, and 89.88 is 38.2% pullback. So I do think that sort of sterling selling is going to be limited, although sterling Swiss doesn't look particularly good on that time frame. If we go down to this time frame, which is the hourly time frame, that last leg lower is just pulling higher from 261.8%, and sterling yen again not as good, but we've sort of got a confluence area down here. And what is quite interesting, if we go out towards these sterling crosses, sterling CAD, sterling Aussie, sterling New Zealand, they're all hitting quite decent fib levels. So I think that sterling bulge out, but it might be basing out for the time being. And we've also got a sterling policy meeting advisor, can't find her name, Silvana Sankarava speaking later on, so we could have a positive day for sterling and sterling crosses. That's me.
Okay,
Thank you, mate. Steve,
So-
commodities.
Yes, let's run through it. Oil continues to push higher over the weekend. Saw previous resistance. Previous resistance.
Easy for you to say.
Yeah, exactly. Break at the end of last week, and we've pushed higher this morning again. Next resistance comes in around 32.26 on this chart. On IG, I think it's around 31.80 or something. Obviously, looking back, we've still got this gap when the world sort of kicked off, really. There's still a $5 gap there. So potential for it to go higher. We've got this inverse head and shoulders formation happening at the moment, or forming, not formed yet. So I wouldn't get too carried away with it. Everything basically looking at the world moving back to normal and demand picking up again after all the record cuts on output. Let's see if there's any how that sort of pans out over the coming weeks. Copper, again, this is picking up on the back of the hopes of that demand will pick up. I'm doing this on gun to the head this morning, actually, on the hourly chart. Well, 4-hour chart or hourly chart, we've got a reverse head and shoulders formation. We're coming down from this $2.43 high, and it's playing out really nicely. It looks really good on the hourly chart, as I show you here. So a break of this I'm going to go for a break at 238, so we get a bit of a clear break of this neckline. Set longs, targeting the move to 243 again. So that's copper.
Nice.
On gold, nice move higher in gold again, and we've broken above the 1749/50 level, trading above it by $13, 1763 trading. The next real level I'm looking at in gold will go to the daily chart to really. Oh, maybe I have to go to the weekly chart. It's not good. It was around 1790 to 95. Let's see if we could go to there. Right. Yeah, just this level here. We can see the sort of like the previous highs around just under the 1800 level in gold. And then it's only a short hop to the all-time highs. So gold looking very positive. I'm looking at buy picking that. Silver, that's reacted nicely higher. It's still lagging behind the gold. You can see the previous highs or the all-time highs in there is around $50, and we're trading at $17. So the poor metal is silver, but the one with potentially more upside, I think, if this recovery continues. That's
Great.
it.
Thanks, Steve.
Cheers, mate.
So over to equities. It looks as though they were very much on the front foot this morning, and they are continuing this bounce that really began around about 3 o'clock on Thursday afternoon last week. And it's been a very strong move. The FTSE 100 is looking pretty robust and strong, but it's rallied into a 78.6% level of this swing move to the downside and then recovered back to 59.37. We were sellers today at 59.20, so it's just a little bit above that entry at the minute and challenging that resistance. So let's see if it can hold on there. It's a similar situation on the DAX. Again, that move that started around about 3 o'clock on Friday has continued. Not really looked back at all in that time. So looking for some key levels on the upside to target or find some potential resistance. We're above a 61.8 and sort of in no man's land between a 61.8 and 78.6 on the DAX. I've got a bespoke resistance there at 10,750, which we are fast approaching. So that will trigger our intraday short there if it gets there. On the CAC, the bounce back hasn't been as good, but that's approaching key resistance at 4395, so we've got shorts set there. Expecting still for further downside. This is over the last week or so, or last couple of weeks. The overall trend still remains to the downside. US markets, as you'd expect, they bounce back most aggressively, and the Nasdaq is leading the charge there. That's about to approach 78.6% of this swing move lower at 92.46. Dow Jones and S&P, we talked about these potential head and shoulders patterns that have been forming. It looks as though we did actually get a break last week, but it's rallied back exceptionally strongly yet again. And I think if it is going to play out, then there is still hope, but it needs to fade or die around about this 2,906 level. Otherwise, we could see another push higher and back up towards these highs that we saw in the middle of May, around about, 2,953.
Yeah.
So I'm still bearish, but just trying to sell into gains, and the volatility is still very much there in stocks at the moment.
Yeah. I think the outlook still for me, is bearish on equities, but that you can't sort of deny these little inverse head and shoulders on the shorter term time frames.
Absolutely, and I did see that. We could go there to there to there, and then maybe it's broken out already, and it is heading higher. I mean, where's the measured?
Yeah, I mean the
that?
target would probably be at that right shoulder top sort of thing. So
Maybe
yeah, it's sort of I tend to think this is we're still in a dead cat bounce area, but
back up to the highs there. On
yeah,
the S&P.
yeah.
A lot of people going back to work, aren't they? So I think that's
I think the
giving
sort
it
of
a bit of a-
valuations are just sort of like crazy at the moment. Just
well, we've obviously got the.
it's almost like they shrugged off what's happened and what potentially will happen in the future.
Well, it's not just the bad data. I mean, obviously, US retail sales declined last week. That was a record 16.4% for April, compared with the expectations for 12%. So, massive underperformance there on the retail sales, and there was declines across all sectors. That's also led to suggestions that the second quarter GDP could contract by at least 40% on an annualized basis. And then we've also got what's going on with US and China at the minute. They're both at each other's throats yet again. The US was looking to restrict the Chinese company Huawei and their access to US chipset technology. And the Chinese Commerce Ministry has stated that it strongly opposed the move and will take all necessary measures to safeguard the rights of its companies. So, with all that in the backdrop, it's amazing, really, that the equity markets are continuing to behave the way they are.
Yeah, it was a Trump aide that said about the flying people around the world.
I mean, they're
that we talked
obviously
about earlier.
singing off the same hymn sheet, aren't they, with these, why they're attacking the Chinese, and I don't know, it's crazy. Anyway, gun to the head challenge. So last week we picked 3 trades. Ian and myself went head to head on dollar CAD, and Steve went short of dollar index. Ian won out with a 2.68R win on US dollar CAD, which more than made up for our 2 losses of -1R to put us in the positive for Friday and to keep us up at that all-time high level on our overall P&L, which is sitting at 102.96% since October the 30th last year. So well done, Ian, for saving our bacon.
It's all right, lads.
You're going to put us even further ahead today with what you've got, I hope?
Doubt it.
Well, let's have a go anyway. Nothing like a bit of confidence.
Yes, exactly. Going back to cable, let's have a look at the basket. So the basket has got a 61.8% fib and a previous swing low here. So, I mean, again, just going about talking about sterling strength, I do think it's going to move to the upside today. So you've already seen the daily chart. This is the intraday chart. So the daily chart, sorry, just to go back, is this an A, B, C, D correction formation? I think it probably is. Going back to this chart, which is the 1 hour chart, just to put some legs in here. So Joe loves an alphabet chart. So these legs are in 3 legs. So as far as the Elliott wave is concerned, 335. Is this a short 5? I think it's going to be with that sterling hitting support. So I'm going to get long of cable at current levels. What's happened there? Hey, oh come on, go down 2 ticks. I'll stop messing about. 121.18, 122.80 target, and stop below the low, which is 120.70. 3.36R.
Happy days.
Hopefully.
Cool. Steve, you're looking at copper, I believe.
Yeah.
Got
I'm
it all
looking at
ready for
copper.
us, look.
Got it all ready for you. Oh, it's pipped up a little bit, is it? Yeah, I'm looking at this reverse head and shoulders formation. We're right on the neckline now. We've had the bullish engulfing on the last hour. So I'm going to keep the stop quite tight. Stop is at 235.90 and entering at 237.40. The target is 241.90, just below the 243 level. So if we were to do a measured move target on this to be more precise, you draw a line from the bottom of the head to there, to the neckline, and add that on a break. So the actual measured move target is above the high at 243.60, but I'm not going to be too greedy. It's a 3-to-1 risk reward.
Okay.
No,
So it
good
would
luck.
appear that both of you are of the opinion that we're going to see a risk-on move today then, based on...
No idea, don't understand all that.
What are you talking about, mate?
I think the dollar's. I think the dollar index is going to edge
What does
lower.
that mean? It's going
Okay,
up.
well,
Just buy
I've
it.
just been triggered on DAX, so I'm going to go with that. I mean, it has overshot that level already, so it's not...
You don't sound too confident, Joe.
I'm not really, but you know, these are the sort of ones that pay out. You know, if you
yeah, absolutely. You can see a bit of pain, and then the upside just comes, doesn't it?
let's go for a massive dump on the DAX.
Yes, more like it.
That's a 12R.
12R.
Steve O special, that one.
Well, it used to be. I'm sort of a bit more
10,775.
Right. Okay, mate.
775 and a target of 10,810. Oh no, that's a stop. Sorry, 10,810. 10,280 as a target. 14R.
Ding dong.
Everyone's giggling.
Yeah.
All the thousands.
No one more than me. Okay, so let's see how they go. Okay, news-wise, we covered a lot of it. US retail sales slumped. We had US equities posting gains, and that's been seen across the board in Europe this morning as well. Continues to be underlying tensions between the US and China, but obviously markets shrugging that off at the moment. This may all be to do with the comments from Fed Chair Powell, who reiterated that the central bank was prepared to do more if needed, and I guess that includes negative interest rates potentially. Sterling sentiment was at a 7-week low into Friday. Obviously, Ian's taken a buy there, thinking that's overdone. That's due to the fact that the Bank of England are talking about easing, further easing potentially, and trying to sort out the economy. But the other thing that we didn't touch upon was the oil contracts, Steve. They are the WTI June contract expires today.
All right. Okay. Yes. So from -38 last expiry to I mean, we obviously have a different price, but it's yeah, I can't see it really happening again now.
No, I mean there could be a little bit of positioning towards the expiry, but
yeah, I mean, we in the run up to that last month, we had a sort of like decent sell off in the sort of the week before, didn't we? And now we're getting a completely opposite move. We're sort of breaking the recent highs. So
significantly less open interest than there was last month. So less of a potential.
Few
for
people have been burnt.
Yeah, including you this weekend, by the looks of things.
Yeah.
Okay, precious metals up at 7-year highs as we saw with gold and silver at a 2-month high as well. So it seems as though there's a dash towards precious metals, which would be an indication of people expecting bumpy ride ahead, but that's not being filtered through to the equity markets at the minute. And last but not least, I've got a book recommendation for you guys.
Go on.
Flash crash.
Yeah.
Look at that.
This is about the Hound of Hounslow.
Oh, right. Yeah. Nice one.
So he was...
Has he written it, or is it
No,
about
it's
him?
about him. It was I've done like 3/4 of the book already this weekend, sitting in the sun. He was the one who caused that flash crash back in 2011, was it?
Yeah.
From his parents' bedroom in Hounslow. Fascinating
wow.
story.
Is it good?
Absolutely unbelievable. Yeah.
He was at one of the
Futex.
Futex. Yeah.
Yeah, he
They
was
were
at the prop house there for quite a while.
Very clever guy.
Yeah, absolutely. I think he's got Asperger's.
Okay.
So he's sort of really.
Matrix type thing, is it?
Yeah, exactly. Super
You can
intelligent.
Yeah. Yeah, I mean, I think he was definitely made a huge scapegoat, wasn't he?
He was only the second person to be arrested for what they call spoofing. Which is
yeah, and
he
what was
effectively
the
doing.
outcome? Did he actually get done for it, or?
Well, he spent 4 months in.
I don't want to
prison
spoil the end of the book for you.
No, he spent 4 months in a prison in the UK.
Yeah.
And then he fined and he was under house arrest for a year.
That was it.
Yeah.
Yeah, so he didn't really
I mean,
do
he just
anything wrong.
exposed flaws in the system,
Yeah.
and there was nothing officially. Eventually, spoofing was obviously a crime, but at the time, I don't think he was sort of, aware of that, and he was only mimicking what other people were doing in the market. He was just better at doing it. One guy from his house in London.
Well, I mean, the banks have been doing it for absolutely years. With and no one there has been put in prison, have they?
No,
I mean, you've got a few that have sort of like potentially threatened with prison, but a lot of the trials have actually retrials have fallen through. Yeah, because it's it's the big top cats that sort of knew that everything was going on.
Yeah.
And you can't sort of like do the prawn if you're not doing the big fish.
Well, you was involved in prop trading, weren't you, Steve?
Oh,
I
thought you were going to say something else then.
I was waiting for that.
I don't know. It sounded like insider trading.
No.
Yes.
So the prop trading. So there was a big bit in the book about how when the HFT stuff came in, the high frequency trading, and you could see it on the ladder. And it just one morning everybody came in, and it just looked like a completely different landscape. And when you was normally looking at the orders each side, you just couldn't make heads or tail of it, and it was impossible.
No. I mean, one of the times I saw that was in 2001 on 9/11. And it was just the ladder. There was nothing either side. And also saw it with the Euro Swiss when they when they moved the peg to 120.
Yeah,
I saw it then. That was it 2011? Can't remember now. And it's incredible to see. It's one of those sort of dreams or nightmares that you have when you're sort of in a position and you're trying to get out and the bids are just disappearing every time you sort of like try and sell it. It sort of doesn't trigger and you just goes lower and lower and lower. So it was incredible to see, and but it's a flaw in the system. I don't know. I just don't think you can blame someone for that. It's the exchange is not taking responsibility for it, I think.
Well, they're so far behind the guys. With the computers, aren't they? And the know-how. If you've got all that talent and can spot, patterns and build systems like that, you're not going to go and work for the SEC or the CFTC, are you? You're going to go and make millions working for a hedge fund doing it. Yeah,
and I think it just shows you the lack of liquidity in the system that things like that do happen.
Yeah.
Just it's a bit frightening thinking about we're going to see things like that again.
Yeah,
it's not like once in a lifetime.
Fingers.
Yeah, it still happens with that, doesn't it?
Go and check it out, guys.
Number,
15 quid on Amazon. I mean, not much practical stuff that you'll learn from that from a trading perspective, but just very interesting story. Okay, let's wrap it up then, guys. Have a great day, and let's all have a great week.
Cheers.
Indeed. Good
See
luck.
you later.
Bye.
Bye.
Got to be in it to win it.
Damn.